Hi, this is Paul from globaltradingsoftware.com, and this is a futures day trading tutorial. We're going to be using the B.I.T.S, the Breakout Intelligent Trading Signals Indicator, to look for those what we call squeezers. So the range breakout is a specific range of the day, so a data point or an opening range, whereas the B.I.T.S looks for contraction in price action but an increase in volume, ready to break out, if you like, and those can happen throughout the day. So we're going to look at a few instances here. So a couple of things. You see some dots on the chart here. So the indicator comes with the previous day's lows, which is these red dots, the close, which is these the cyan, the mid-range, and then the previous day's high. So there's something to consider when we're trading. These green and orange zones down here, these are support and resistance zones that I've put on there, just to show you that we don't short into support. Some of these zones are taken from higher time frames. We can see these pivots here, 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 and here. That denotes that that's called on the 30-minute time frame. We're on the 10-minute right now, but I've got some multi-layers there with multiple time frames with those support and resistance zones. Very, very important, and these will be available automatically in 2023. But I want to concentrate on the B.I.T.S today, because it's very important to understand risk to reward, what we've got fresh air wise, and what those risks are. So I'm going to take this first signal here. So I want to zoom in quite a bit here so we can really understand what's going off. So this is the signal candle here. It is red, so that means it's got more volume than the previous candle. So it's a distribution candle. It's actually equal to or less than the average range of the previous 20 candles as well. So again, we're looking for that contraction in price action, but that increase in volume ready to pop. So we print the green here. This is a signal candle. The green is your entry, it's your start line, and the stop is the red line. So that's about 26 ticks on this ES risk at this point here. And then you see these dotted lines here. So the cyan dotted line is 0.5. That's a 1-to-1 on the yellow dotted line, 1-to-1.6 on the cyan dotted line, and 1-to-2 on the solid cyan line. So that gives us our risk reward to actually measure where potentially we've got some good risk reward to the next support and resistance zone, because we don't want to be going long into resistance or short into support. So this is a good trade. We've got great risk reward to the next support zone now. So let's go. We go in, and then we see these three MAs. We've got the yellow above the pink dots, which is above the cyan. So this helps us manage the trade. So we can get down to this 1-to-2 and take our profit, which, there's nothing wrong with that right now. Or we can allow these three EMAs to play out, come down, but once we get the cross and we're all out of sync, so the cyan goes above, in this case the yellow, and above the pink dots, we would get out at that point. And that's around about 1 to 1.6. So we're talking about 40 ticks profit there, taking at that target there of that 1-to-2, 52 ticks is not a bad type of trade. Also, on the chart down at the bottom here, I've got the BIAS Depth Heatmap, and the links will be in there. This is the NinjaTrader version. So the links will be in below for the B.I.T.S and the BIAS Depth Heatmap, because we use that for confirmation. So when we get this signal candle here, if we look down all 6 time frames here on the BIAS Depth Heatmap, so it goes up 6 different time frames as it goes down, the depth of that bearishness, if you like, is very strong. So that's your signal, that's your confirmation. Your entry is printed here, your stop is printed there, and then you've got a couple of sort of trade management options to do, but the main one is using these 3 EMAs. Now later on in the day, even if we miss this trade, we get another spectacular signal here. This is the signal candle, and it's really, really contracted in price action, but there's an increase in volume. So even though these candles were quite small leading into that, that is average or less than the previous 20 candles. It's got greater volume. The signal candle, all 6 time frames are red. We go. This is a 13 tick risk you know, it got to 26, maybe 40 ticks down at this support and resistance zone here. See how it tipped just off there. So another great trade. Let's move along in time. There's no signals going up, but then we get some signals coming down, and these are the ones where sensible traders don't take the signals, because yes, we got a contraction in price action, we got an increase in volume, but we don't short into support here. This is a, if I've got 60 minute zones on there and 30 minute zones. If I take them off, we're still on the 10-minute zone here. This is another zone that's just starting there on the 15. I put the 30s on. You can see this is very, very strong support and resistance zone. So we don't short into support. Another signal here. We don't short into support. It's sensible trading. Support and resistance zones are very, very crucial. So now we start to try and push through. We do have a signal candle here, this indecision doji, but the entry is in the zone. Don't like it. Really don't like it. Let it push through, let it do its work, and then we get a fantastic signal on this candle here. So this is the entry here. The stop is just into the zone, so that's a really good risk to reward. We're about 1 to 4 down to the next support and resistance zone down here, and that's a mixture of 15-minute, 30-minute, and the 10-minute support zones there. So really, really strong. So we take this trade. We get some reasonably good, you know, we're 4 out of 6 red on the BIAS Depth Heatmap here. That's pretty good for me, especially as it's pushed through support. So great looking trade. Again, it gets down to this 1 to 2 here. That's around about 13, 15 ticks sort of risk there. That's about 30 tick profit there. Really, really sensible trading. Then we get another signal at this point here. Now, these little candles here, these were signals, okay? But then we produced more signals the candle after, so that volume is really picking up. So eventually we do get this last signal here, but the risk to reward is only 1 to 1 to that support zone. We don't take it. So we've taken a few trades right now, all profitable. Now we get another signal here, great risk to reward, but it breaks the stop for the entry before it goes through the entry. You just cancel the order. Now things start to turn around, getting really interesting here. Going into the night session here, we get a long signal at this point here with, you know, we're 3 out of 6 sort of time frames in the green. You could take that one. The risk reward is fantastic. It works out. The next one is 4 out of 6. I prefer this one, to be honest. We've still got a risk reward of 1 to 2 to the resistance zone here. So you take this one. It does keep going and keep going and keep going. You see how now the cyan is above the yellow and the pink, and we stay in the trade all the way through until it hits the resistance zone here, that 1 to 2. Take it out. If not, when the EMAs cross, we take out there a little bit of profit as well. So it's just that continual trading opportunities for breakouts when we get the contraction in price action but the increase in volume. Having that BIAS Depth Heatmap is probably essential to give you that confirmation of trade, just to make you wait until you've got full confirmation. But also having support and resistance zones and being able to put those on your charts are extremely important. And we had some great examples here where we don't short into support. And this is crucial for any trading strategy. Understand where that support and resistance is and do not go into it. That's the crucial thing here. We didn't take this trade. Yes, it worked out in the end, but we have to have a set of rules. We didn't take this trade. It never appeared, it never went through the start line anyway, but the risk reward was not good enough. Just keeping on top of that, understanding where that support and resistance zones are is very crucial. Now, in 2023, keep an eye on the website, globaltradingsoftware.com, because all of these support and resistance zones are actually automated. They've taken my sort of trading brain, the logic behind where I put my support and resistance zones, which are very sticky, and they've automated them. And not only that, on the 10-minute chart here, you can go all the way up to weekly zones as well. So I can put the 60-minute zones in, the daily zones, and even the weekly zones. So, you know, we would say that this is a really strong support area here, because we've got the 10, the 15, the 30, the 60, and the daily. If I just unclick the daily here, you'll see the grey disappear. So very, very strong. Look out in 2023 for these automated zones, because these are what we call cool tools, essential tools for any trading strategy. So check out the links below for the bits. Great, fantastic day trading opportunity. Even this on the 10-minute ES is, we have some great trades. Just be patient and get that BIAS Depth Heatmap to give you that confirmation.